May's beginning with a bit of a thud in oil prices. WTI futures have gotten below $61 a barrel, and even Brent has spent some time below $70, albeit briefly. Some of the factors behind the drop in prices has been U.S. oil inventories are moving much higher. They're actually well above where they were last year, but still a couple million barrels below the 5-year average. And one of the things that may have exacerbated the move lower in prices has been some of the speculative length ahead of the preseason demand getting out of the market. So they're all kind of jumping out of the market at the same time and selling positions, and that's kind of created a bit of a snowball process. One thing to keep an eye on, though, is geopolitics. The Trump administration announced that there would be no extension of waivers for those that are importing Iranian oil with the intention of bringing those exports down to zero. That may be easier said than done, but that is the administration's intention. Additionally, we're keeping an eye on Venezuela as the opposition leadership has basically started a coup against the current president, Nicolas Maduro. So those are some of the key factors in oil as we get through the month of May. But refinery operations still limping along a little bit. Total refinery utilization from the EIA to start the month of May was about less than 90%. That's a little bit lower than where it might be this time of year. We saw a bit of a spike in downtime at Midwest refineries, and that's due to some refinery issues, both planned and unplanned, in some of the Ohio Valley area refineries, and that should make supplies relatively tight. And also, additionally, that could help build up Cushing inventories as there's some pipelines that feed those refineries, and they won't be taking as much crude oil in for the time being. But by the end of May, we're expecting the refineries in the U.S. to really kind of be clicking on all cylinders. Most of the planned work should be done by then, and even some of the unplanned work that emerged in March and April should be wrapped up by then. Currently, retail gasoline prices in the U.S. are just below $2.90 a gallon. Probably a little bit more upside, but for the most part, I think most of the big moves are put in. So we'll be keeping an eye on where prices head between now and Memorial Day. But this recent drop in prices should give marketers a little bit of margin relief, which have been under pressure for really much of the last 2 months. California retail prices are still above $4 a gallon, and that's due to some refinery issues there. We've seen imports come in to help support supplies there. We expect imports to continue as high prices there should continue to pull cargoes from other parts of the country and other parts of the world that can make California spec gasoline. But for the most part, by the end of the month, we expect to see refineries really starting to hum along and starting to really pump out gasoline, diesel, jet fuel, etc.